Good afternoon and welcome to our third rendition of Investment Hacking Live. Just wanted to kind of give you a rundown of what we're going to talk about today. We're basically going to talk about front load fee versus no fee investing. And most people that invest, especially if you're kind of a passive investor, you don't become aware of the fees until after you're ready to pull the trigger with a company usually. Many investment companies that are selling mutual funds and other types of investment packages like that do charge fees, and what that means to your portfolio is what we're kind of going to go over today. I'd like to welcome you. It is Thursday at noon, and we're going to be doing these investment hacking lives 1 to 2 times a week. You'll be invited by email and text, and then we can also run the replays for you. It's basically a conversation. We have a lot of conversations with investors, and it's a conversation to kind of go over some tips and tricks and all types of investing, what the market's doing. This is really one of the better opportunities of a market right now, because turmoil usually is what drives value creation quickly. And the world seems to have an unending supply of turmoil right now. I don't believe that means that the world is coming apart. I just think it has to do with a lot of what we get for information streaming through the marketplace. So these discussions are very informal. The number one thing that I don't have by disclosure this morning, so I'll just kind of do it from memory or writ, which is basically we're offering no legal, moral, or ethical advice here. This is just a conversation. And I have it here. So I'll read to you. Real estate investor results and its officers and members provide no legal or professional advice. You should always consult a licensed professional, a professional appraiser, real estate agent, or a financial advisor when making any decisions regarding the purchase and sale in real estate. And the information obtained from reir.co, real estate investment results, and or its members is intended solely for the general guidance and exchanging, buying, or investing in real estate, and does not constitute legal, financial, tax, appraisal, or accounting or professional advice. Because real estate contracts are closed and closing procedures and disclosures are guided by state law, always consult a legal professional whenever engaging in a real estate transaction. That is to keep the attorneys happy. So this is just a good conversation about what investing can be a blessing in your life, and little tips and tricks of things that can be done in any type of investing. We will often open up for questions if there are any. You can also give us feedback via email if you have questions or things you want us to cover. And there is a lot of things that people don't know about investing when they get started, and that's really where we want to talk to you about, because we actually invest in real estate. We do have a vested interest in looking for people that want to invest in real estate with us. So that's another reason we're having the conversation, but there is no obligation to ever do anything with us just to be on this call or just to be in this meeting. So with that, let's start with front load versus no fee investing. So the word front load is kind of an interesting word, because load here means charging a fee. And if you get involved in investing and start reading, especially if you've been around for a while, you know they come up with words to describe things that sometimes don't make a lot of sense. And instead of just saying fee, they're calling it a load fee, which means that when you are entering into the transaction to invest your money into one of these products, they charge you a fee or a sales. It's really a sales fee, because the person who is advising you is getting paid that fee to advise you, and generally the company that you're investing with is taking a portion of it. So like when you have a realtor sell a house, generally the realtor gets a fee, but he is paying a fee to his broker as well. Same exact thing is happening here in investment terms. And the one company that one of my investors invested it with that I know charges front load fees is Edward Jones. And I looked it up today. I thought they charged 3%, but they actually charge 5.75% front load fees on a lot of their what they call Class A or best products. And because of that, we're going to talk about what that means to your portfolio as we go forward. So front load fee is what they charge at the front. Then there is they call it a no load fee, which means that it doesn't happen at the front. It actually happens at the back. And then there's many times a holding fee or a annual fee. And a lot of times that's like 1.5%. The back end fee is for products that don't have a front load fee, but then when you sell the product, or it's easier when you sell out your stock or mutual fund, or sometimes it's at the end of a year, they charge you this back end fee. The back end fee is usually a percentage of the gain plus, like I said, an annual fee. But today, the biggest one I want to talk about is front load fees. There are a lot of people that say front load fees are really good, and the reason they're good is because there's nothing hidden about them. They're right up front. You get whacked at the front, and then you don't have to worry about paying fees on your profits. The problem with that context is what we're going to cover today, because there's also no fee investing, which is what we offer our investors, and I'll go through that. But let's just start with what is the general cost of a front load fee. So it's 3% on many products. Edward Jones is charging 5.75%. So if you were to stick $100,000 into an Edward Jones product, you immediately lose $3,000 if it's 3%. And if it's a 5.75% fee, you lose $5,750. Now, it's not that much money on $100,000, correct? But a lot of times people are looking for a good rate of return, and that good rate of return is somewhere between 5 and 9%. So let's just call it 7%. That's what we're going to work with today. If you are working from a 7% perspective, it takes you on a 3% fee up front, it takes you 159 days. Let me look this up because I changed it this morning. At 3%, it's 159 days for your investment to go back to where you originally put that money in it. So on a $100,000, it represents only paying $3,000 at 3%. If it's a $500,000 investment, you're paying $15,000 right off the top the first day, and then it takes you 159 days at a 7% return to go back to the baseline of what your original investment was. Now, if it goes to 5.5%, it actually takes, with its same 7% or 5.75%, that fee, if that fee is 5.75%, instead of it being $15,000, you're paying $28,750. And at the same 7% return, it takes you 314 days to get back to zero. So you invest $500,000 with Edward Jones, and 314 days later, if you're getting a 7% return, then all of a sudden you're back to where you started when you put your money in. Now that to me is a problem, but many people don't know they have another option. And that's kind of what we're here to discuss today, because if you be charged a lower fee or no fee, then you would automatically be earning against your portfolio on day one versus waiting 314 days to earn. Now, the no load fee is just a fee at the back end. In my view, for a sophisticated investor, if that's all you could find as a product, I think that would be better, because at least you're getting charged on a gain. If the product is growing for you, then you're getting charged on the gain. A lot of people concern themselves with, well, they don't want to give up so much money because you may pay more actual dollars as a percentage of a gain, but then you're getting more dollars as well because the gain would be higher. But with a no fee investment, and that's what we really have, we not only have a no fee, we actually reverse it, and we offer points for putting money in. So what does that mean? That means that on the same $500,000 investment, you can have, we pay on our deals a total of 5 points, which is on 500,000, it represents, let me pull it up here. It represents $25,000 go to the face value of the investment immediately upon going to closing. So you would put your $500,000 in, and instead of losing the 5.75% with Edward Jones, you would gain 5 points. So it's really a $50,000 swing in your direction just by investing in a product that pays you to invest versus charges you a fee. And then from then on, we pay a 7% return on top of that. So then that $525,000 begins to earn 7% a year immediately upon entering through the closing table on a real estate transaction. And at the end of the year, the monthly or the daily interest adds up over 360 days to $36,750, which is a total return of $61,750. So if you noticed in the email we sent out that there is a difference of $27,000 just by switching, and that is if you're paying only 3% front load fees. If you're paying a 5% front load, a 5.75% front load fee, you are actually having a swing of greater than $30,000 just by choosing the right investment. And that's really where knowing a little bit more about where you're putting your money and what it means, what a front load fee is, what a no load fee is, and what a point structured benefit that we offer is, because the opportunity to invest and make a better return is massive. Now, why is it that we have no fee investments? Because we are actually taking that capital and we're the principal putting it to work. Whereas when you invest with a mutual fund company or like Edward Jones, like we're talking about, they are actual the person you're talking to is a salesperson selling you a product, and then somebody else is taking that money and putting it to work for you. Whereas we're actually using your capital to either build a house or do a remodel. And then when that transaction is done, we bring all of your money back plus the profit. And you can either go into another investment with us, or you can use it to spend or do whatever you want with it. But because of the fact that we're principals actually investing the money in our deals, it allows you to make a higher rate of return and not be charged any fees because we're earning money with your money. How is your money secured with an Edward Jones company? It's usually secured via a mutual fund in the stock market, which is not a bad place to invest money. There is advantages of the stock market. There's advantages to real estate, and there are different advantages. We covered some of that in a couple other calls, but we could cover some of it later again. But the big advantage of real estate is your money is tied to a fixed asset. We always send all monies through a closing table, and that investment gets tied to a first note mortgage against a physical property, and we use a less than 75% loan to value figure, which means that whatever we're borrowing, we never borrow more than 75% of the finished value of the property, and then all of our deals come back in 1 year or less. If we do cross over a deadline, we actually even pay you a higher payment because we add in a penalty that's a self-imposed penalty if we cross over the deadlines of what we said we're going to get your investment done, so you can actually make even a little more money there. But the value of doing a no-fee investment versus a fee investment is substantial, especially when you consider it takes so many days to get back to zero versus you start ahead with investing with a no-fee investment. Now, is there reasons to invest in mutual funds? Yes. Everybody's portfolio is different. Everybody's what they're trying to get accomplished in their life from an investment perspective is different. And you really should talk to any investment advisor, anybody that you trust about what you're investing in. But we do have an opportunity today that we're going to tell you about. It is actually a duplex that has a finished value of 1.1 million. It had both sides will be worth 550,000, and the initial investment needed for that deal is $690,000. So if you were to put $690,000 to the closing table, the 5 points is $34,500. So your actual face value of the note, like I told you earlier, is going to be $724,500. So if I paid you back on day 2 in this investment package, you would immediately get that 5 points. I cannot clear the note and mortgage without paying that 5 points. And then from there, it is a 1-year plan, 360-day return of 7%. It is another $50,715. So the total gain on this deal is actually $85,215 in one 360-day period. Like I said, there will be a first note mortgage. There'll be a loan to value ratio of less than 75%. On this one, the LTV is actually 62.3%. And then we have hazard insurance, mortgage insurance, and we are building out a physical property that will sell. We have a shortage of real estate in our market, so that's why we're doing so many new builds right now, and that's what this is. And then on top of that, once we get your capital in and back to you, we can sometimes get this deal done faster than a year. And if that's the case, when you come in on the second deal, you get another 5 points. So the reason we split it out between points and interest versus paying a flat 12% interest is because if we can rotate money faster, it rewards you, the investor. So instead of getting, so let's say we just did this deal twice in 1 year versus once, you would get an extra $25,000 because you get the 5 points on the first deal and the 5 points on the second deal, and then you'd earn the same 7% for the full year. So it would take your interest rate from 12% to around 17%, which is a huge return tied to real estate, where many people don't have the opportunity to do something like this. Again, it totally disadvantages you if you are waiting 159 days in the sense that you'd be paying a 3% front load fee, or on the 5.75% front load fee, you'd be waiting 314 days to start earning against the $500,000 investment. So this is a great opportunity. If you have a desire to invest in a product like this, you can reach out to me on my cell phone at 608-306-1199. We can have a further discussion on it. We can also cover you can email me at joshua@realestateinvestmentresults.com. And you can check us out on our website at reir.co or realestateinvestmentresults.com. Both those URLs work for the same website. With that, are there any questions yet, Brady? No? Okay. We will be doing a little bit more training like this every week. Next week, we're going to talk about what the value of Roth IRA investing is, because there is a way to get either all or some of your money invested through a Roth, depending upon the deal. And if it's invested in a Roth IRA, it's actually tax-free forever within the Roth IRA. And we can invest with the Roth IRA as well, which gives you a huge opportunity to not only get great gains, but then get great gains without taxes, which actually increases your gain as well. We'll be doing that meeting next Tuesday, and you're welcome to sign up for that meeting as well. We'll shoot out an email with it. And if you have any questions beforehand, you can submit them, and we'll give you a question and answer period. With that, the reason I'm in a different place today is I'm actually in Florida at the real estate conference. I had a pretty good week because we had a real estate deal we did, and the check came through at this conference. It was a land deal in Ypsilanti, Michigan, and it was pretty interesting deal. We'll be doing quite a few more of these land deals all over the United States. Not only the deals that we're working in Wisconsin, but we have stuff that's going to be happening in Florida and likely in Tennessee and Michigan, Ohio, a couple of other places. So there'll be more opportunities for investors that are really interested in putting their money to work tied to real estate and looking for good opportunities to grow their retirement funds. With that, I'm going to sign off for the day. Hope you have a great Thursday and have a great week. And thanks for joining us.